Rob Roy, and welcome to the HUBB live broadcast. We don't have Brandon with us. He's off traveling, so you just have me. We have Ryan in the background who will handle a few questions at the end of the presentation, but happy to have everybody here watching us today. A little bit of economic news. A couple last 2 days have been quite interesting. Yesterday we had the CPI report, which came in a little hotter than expected on the headline number, the core, ex food and energy. And I could go off on a tangent on that, on why we even have a core reading. Why does it not matter what we pay for golf for golf? We were talking about golf before we started. What we pay for gas and food. They take that number out. They take that number out because they're a bit more
There you are.
Hopefully,
a little hiccup there.
Yeah, it's a bit cold up here in the mountains, and even though we have cable internet now, it doesn't like the cold weather. So it's a stormy, rainy, thunderstorms. Actually, thunder. If you can imagine having thunder when it's 38 degrees, it's the weirdest thing for me. But that's what we're going through. But anyway, back to the economic news. The CPI reading yesterday on the headline number was slightly hotter than expected, although still lower. But outside the Fed's range. Core CPI number came in line. And then we had a slightly weaker PPI today, which that's a good thing. So if you're not familiar with those numbers, the CPI is a consumer price index. That's what we pay when we go to buy stuff. The PPI is a producer price index. So think of the PPI as wholesale and the CPI as retail. So what you're really looking for is what's the spread difference. So if the PPI is down, meaning that wholesalers can pay less for their goods, but they're still able to charge a decent fee, that helps the bottom line. So the market kind of said, well, let's see if we can't bounce back to the upside slightly, but off where we were earlier in the day. Yesterday, as you see the chart here, we were down early in the trading day below the 10-day moving average, but kind of rallied in the afternoon. And then here we are with the high of the day, moving that wave 3 high from where it was over on the 28th of December to today's high. So we got enough of a move on the high of the day near the open to at least move that wave 3. If we can continue this gradual move to the upside, I think we could likely see a run up towards that 490 to 500 level as we are right around 480. I did want to switch over to the weekly chart. Some of you may have heard I mention this gentleman's name often, Jeffrey Gunlock, from the bond side of things, because he's, there's a couple guys known as the bond king, but he's one of them. And he came out and he was talking about how he sees a double top in the equities market. And I will tell you from history, his calls are a lot better on the equities or on the bond market than they are on the equities market. So take it with a grain of salt, but you can clearly see what he's looking at. These highs that go all the way back to November of 2021 is right where we are now. And we're sneaking into this wave 5 box. So the point is that on a longer term basis, we're at some pretty significant resistance here. Now, if we can break above that and head up towards that 500 level, no, we're still within that wave 5 target on the weekly chart. So point is some resistance ahead. We'll see how strong the market can be if it can push up into this level and get high enough to relabel this 5 to a 3, because that's what will happen with the Elliott Wave algorithm. And by the way, if you're not familiar, this software program is called Profit Source. It's from the HUBB organization, the channel that you're on now, HUBB Financial. You can find out more about it at HUBB.com. It's programmed exactly to the Elliott Wave algorithm as Ralph Nelson Elliott himself wrote it. I think it's the best Elliott Wave software that exists. We're in the beta form of the live charts, which we will be showing you soon once that's fully launched. But we're going through and testing it out. Kind of the old idea that Microsoft used to do, that they would release new versions and they'd let all the people that were using it find the little bugs, and then they'd come out with their patches to fix it. that's the phase that we're in now, going through, looking at it on a daily basis, figuring out where we might need to make some tweaks here and there before it's a full-on launch. But we do that in the beta form. We don't do that on a full-on launch like Microsoft used to do. But exciting to see that coming up here in the next few weeks on the HUBB Financial channel, this live show that we do. So I did want to point this out. Just keep that in mind, that there's some pretty good resistance where we are, and a move above this level would be pretty impressive. So there's the line from the weekly chart. You can see with the move up today that we kind of backed off as we got near that. So the shorts are going to try to hold this. The shorts will try to plant their flags here at 480 and see if they can keep the market from breaking that. But if we do break above the 480 level, there'll be some short covering. That could give us the rally up towards that 500 level. And then we have to wait and see what our indicators tell us as to whether or not we may have either an extension in the 3 or 5 or relabeling on the weekly chart back to a 3. But we're not there yet. So trade what the market's giving you, which right now is a slight bias to the upside, but understand that there's a lot of resistance with where we are right now. I don't think we're going to see big significant moves unless we break above 480 with a follow-through day. That will initiate the short covering, and then you could see some big up days. So the next week or two is going to be interesting. As a reminder, Monday is a market holiday for MLK Day. No market trading on Monday, so we have a 3-day weekend, which makes today's close really interesting. How are the traders going to handle that going into the weekend? You know, there's some rumblings from some attacks that we've been involved in, and that's always something that we have to keep an eye on. So with all that noise going on, will the traders want to stay long going into a holiday weekend, or could we back off into the close as traders may, pair off their upward moves over the last few trading days here in the second week of January. So I'm going to place a lot of interest on what happens at the close. We'll be talking about that in the weekend update over on the EWO channel, so we'll see how the close goes, and then specifically what happens on Tuesday's open. If we look at interest rates, I think that's pretty interesting because you would have thought we would have had a big move to the upside in rates yesterday on the slightly hotter than expected CPI number. Rates were up earlier in the trading day as people were saying, well, that's going to push the Fed a little bit further out on any potential rate cuts. And I've been on the record as saying I think the Fed will be late to the party. I think the market is giving the Fed a little more credit than maybe they're due on when they are going to initiate these rate cuts. But we sold off towards the end of the day yesterday. So you can see that we were higher early, but then closed near the low of the day. And then rates are down again today, which is really, really interesting. The dollar is slightly higher in today's trade, but not a lot, still staying in this range here around 102. And talked about this in the past, so I won't spend a whole lot of time on it, but I do think the sweet spot on the dollar, meaning that it really isn't influential in the equities market, is in here between this 96 and 107. I know it's a big range, so it's got a whole wide area. We have to go back a ways to see 96. I know we came down in July to around the 100 level, but I wouldn't be concerned about the dollar unless we broke 96. If that occurs, that means that countries around the world, the global economy is losing faith in the dollar. You hear all the comments about the debt levels that we hold and all that kind of stuff. So if we were to trade down there, that would be really nerve-wracking. You would think, the dollar going lower, that's great for international companies, and it would be from the exchange rate, but it would also mean likely that we are in a bit of a significant global recession to the point where people are concerned about the debt level that we're carrying. Now, for those of you that pay attention to this kind of thing, when you're in an election year, market tends to want to drift higher into the election. So we have that coming up at the end of the year. that could be a catalyst to drive us up near that 500 level. But big range there at the dollar is dead smack in the middle of, so no influence one way or the other in the markets with the dollar. We take a look at the VIX, and back, here we go, even yesterday, back below that 13 level. Not a whole lot going on with the VIX today. And so can we hold this level of 13? Are we going to break below it? If I put the Elliott Wave algorithm on here, and yes, Elliott Wave does work on the VIX. Some of you ask questions about that from time to time. It's still a chart. And so the algorithm works, and you can see that we do have a potential move down towards the 10 level. We've been there before. It wouldn't be that unusual, but we haven't been able to do it over this past year or so. We've held in this 13 level, and if you watch the VIX on an intraday basis, as I do, you'll see bounces up and then back down, and we just kind of churning, and we've been doing that since we came back down to this level here in November. Notice the difference of what happened when we came down to this level in September. We had a big spike up in the VIX. It hasn't materialized, just these small bounces, which basically just give room for more upward moves in the market. So a move down towards that 10 level certainly means we're rallying and could be rallying significantly in the equities market. That would be that short covering moving up towards the 500 level. But we want to see if we get any sort of a bounce here. So it's another thing just to add to the whole, let's be cautious right here, be prudent, find the best chart patterns, trade those, but don't necessarily go all into the long side, not with the VIX this far down. We break below 12 and start to head lower, then I think it's not an all clear, but a much clearer signal that we can try to be long on the equities, at least for a bit of time till we approach that 500 level on the SPY. You can make arguments on both sides, positive and negative right here. That's what usually happens when you get an area where you just want to be cautious and pick your best spots, and that's what we've been doing. We closed out a nice trade for our EWO traders that was less than 24 hours, 50% gain on symbol VEV. So that was nice. But moving over to some of the other areas of interest, we certainly have to, in Brandon's honor, reach out and talk about Bitcoin. Now, Bitcoin is down in today's trade quite a bit. In fact, we're back down into this whole area where we had this triangle before we broke out that occurred into January, and all the anticipation of the Bitcoin ETFs, they're trading now. They started trading yesterday. You can see that Bitcoin was up higher yesterday and then closed near the low and following through with that. It's not that unusual because you usually come back and test a breakout of a triangle. But is this a full-on buy the rumor, sell the news event, or is this just a temporary thing as we move into that halving that comes in April of next year? Different story here, however, on Ethereum. Rocketing to the upside, only down a little bit in today's trade. However, when we look at the chart, you can see that the wave 4 came right to the 38.2% fib level, which means you look for a 61.8% extension, which is right where we are. And we're dead in the middle of this wave 5 tap box. So you would expect a bit of resistance here, which we are seeing in today's trade. Now, again, if we break out of this wave 5, that five. What we want to know, right, is the wave 5 exactly where we're supposed to be, right dead smack in the middle of the tap box. It doesn't get any more accurate than that on the Elliott Wave forecast. However, there are extended wave 5s. There's extended C waves and zigzags. So what I like to do is look at the DMI to give a bit of an indication of, is there enough strength in this to continue higher and potentially relabel this chart? And the DMI looks pretty constructive. It's broken above 20. That's my level. It's a bit more aggressive. Over on ewotrader.com, we have a lot of education on the DMI, and a lot of people talk about the ADX breaking above 25. I think the times where we break in this kind of a fashion above the 20 level with good separation between the two directional indicators oftentimes we do go to 25, so it gets you in a little bit earlier by looking at the 20 level. So it seems like we want to kind of turn around for another run, but if you're a bit more conservative, you want to wait a few days, especially with the sideways move kind of that we're seeing in Ethereum today, to see if that ADX does continue to the upside there. So if these two directional indicators continue to separate as they are, and the ADX breaks above 25, I think we're set up front in them. Another reason sideways move today I don't think is unexpected is look how far from the 10-day moving average. So in the previous two trades with those big moves to the upside, we're quite a bit away from the 10-day moving average. So we're overbought short term on Ethereum, and any move to the downside, as long as it stays above 2,400, I think is okay with Ethereum, because that's where all that consolidation was all through December into the first part of January. And so a little backing and filling through here would be constructive, actually, for Ethereum to move higher as long as it stays above 2,400. So that's going to be the key to watch. Can we hold above 2,400 and then have that DMI continue to be supportive for an extended wave 5, or perhaps the 5 relabeling to a 3? We'll see. But that's a pretty good fib level on the 4 at 38.2. It's not the strongest of all fib levels, but it is a good one. And we bounced off of that exactly as you would expect based on Elliott Wave rules. So all that looks pretty good in the whole Bitcoin crypto world. Also wanted to show a few other stocks of interest. We had questions on this last night in our insiders meeting that all of our alert subscribers at ewotrader.com are able to attend about gold. Well, we've got to move up higher in gold. So a little bit of a bid here in gold. You know, we can't seem to get above this 190 level and hold it. And we are off the highs of the day on gold, at least at this point in time. But we've come up and we've tried to break 195 twice, no follow through either time. So back here on the 1st of December, just a one-day break, and then back down we went. And then we tried again here at the end of December, and no follow through day there either. That's one of the reasons that's so important. But we're testing 190 right now. So can we hold it? Can we break above it? Can we get a little bit of a bid here? Perhaps. We looked at the chart of SLV last night as well, and talked about how we were getting into kind of spooky land here, where it looked like we were trying to break below 21, which is really a key level of support here on the SLV. But with the bid in the metals today, we're back above that. So if we can close above 21, it's kind of no harm, no foul on yesterday's move. And then we look and see if we can perhaps move higher. Now, this wave 4 at 82% means that's a disqualified Elliott wave pattern that will disappear. We did have a downward zigzag pattern here, as you can see, on the SLV, and right to the 61.8% level we've held so far. We're testing the 38.2% extension in the C wave. So oftentimes when you're looking to see if you're going to go to the next fib level, you test the previous level first. So is that all this is? Is this a legit bid in the metals, or are we just bouncing up here to set up for a run down to the 100% extension? 21 is the key to keep an eye on the SLV. I think you can be long as we're above 21. But if we break back below that with a follow-through day, you've got to expect we're probably coming down to break below 20, perhaps even all the way down to test these October lows. So watching 21 is going to be the key on the SLV. Now, we talked about this last week. We talked about it Tuesday night in TradeFinder on Tesla. And we said 240 was the key level. We needed to hold that 240 level. If we didn't, we were going down to 220, which is where we are today. Didn't take long, didn't think it would. And there's not a whole heck of a lot of support right here at 220 either. There's a little bit, but not a lot. No 5-wave Elliott wave pattern has been qualified, so this is an impulsive move to the downside here. Do we bounce up and create a zigzag lower? Can we hold 220? Almost feels like 200 may be in play here, which were the lows in Tesla back at the end of October. So kind of a nervous time here on Tesla. We have had a negative with the 10-day moving below the 30-day, which the 30-day is the fuchsia line. The blue line is the 50-day moving average. So we're below the 10, 30, and 50-day moving averages all on Tesla, and a little tiny bit of support here at 220. Maybe that holds. Maybe we go sideways for a bit and let that 10-day moving average catch up. But it would not shock me to see Tesla come down and test the 200 level. So I know that upsets all the Tesla bulls, and there's a lot of them out there. But that's what the charts are showing. So, I mean, we called it so far that if we couldn't hold 240, we'd be at 220 pretty quick. We are. Can we hold this 220 level? It's shaky at best, but we'll find out. Another negative here on Tesla is this whole series of lower highs, going back to the high in July, then that high in August, October, and then we came up and just tested that October high here in December, and then down we go. So some work to do for Tesla to want to look long again. So what would be a long entry? Well, if you're aggressive and we can get back above 240 and get back above those moving averages, you could take a shot at it there. The safer, and I usually try to give an aggressive and a more conservative view. A more conservative view would be, let's let Tesla show us it can get above 260. If it can break the 260 level and start to come up into this area up in here, then I think you could take a shot long on Tesla. But you at least want to see it above 240. And again, that would even be an aggressive entry. It looks like more of a good short here than it does long, although we are a touch oversold at this moment. So that gives you a bit of a roundup of what's going on with the equities markets and a few of the stocks of interest that I think people like to talk about. And Ryan, if anyone has any questions, I'm happy to take a few of those now, or we can send everyone off for their holiday weekend.
Yeah, we got a couple of stock requests. We have, excuse me, we have Tesla. A couple people have asked about Tesla, and then Coin.
Yeah, I forgot about Coin. So we just did Tesla and now Bitcoin. And, there's an awful lot of commentary out there that so we had this great run. So there's two things to look at here. First of all, we had this really nice big run in Coinbase. And so some pulling back is kind of expected with the strength of that move, basically giving you a better than 100% gain in a very short period of time on Coinbase. But a lot of people think that with the ETFs trading, it could be a negative on Coinbase. So people buying into the ETFs rather than trading on Coinbase. So we needed to hold 140 is what we talked about last night, and we didn't even really give it much of an attempt here once we got down there yesterday. So we've broken below that today. Now the positive, if you want to be long Coinbase, is this wave 4 has corrected down to the 50-day moving average and right at about a 50% correction here in the wave 4. Perhaps we can hold in this area. We are starting to get to a bit of an area of support. Probably need to draw that line a little bit lower, much to your chagrin there for the July highs. So that would be probably in the neighborhood of a 61.8% correction, which wouldn't be surprising considering the strength of this run higher. Yesterday, we had come down right to where this triangle was. We had this nice breakout of the triangle. Oftentimes, when triangles break out, the breakout move is retraced. That's where we were yesterday. So we're breaking even below that in today's trade. So the longs on Coinbase are going to need to step in here soon. Perhaps a lot of people are buying into the fact that with the Bitcoin ETFs trading now, that could be a negative for Coinbase. Up until today, I thought, okay, we gave some back. We're trying to consolidate there between 140 and 160. Went back to where the point of the triangle breakout was. We retraced that really vertical part of the move that occurred here from mid-November towards the end of December. This part of the move here, what goes vertically up often comes vertically back down, which is exactly what happened with Coinbase. But today is certainly worrisome for the potential of moving all the way back down towards 110. And perhaps if we make it down there, that could be an entry. I feel like if you want to be long Coinbase, you might need to wait. I don't know that this is a good entry here yet, because breaking below 140, if we do indeed close there, is certainly a negative and kind of indicative that we might be wanting to come down and test that 110 level. So yeah, not so good on Coinbase, Ryan.
Oof, man. I wish I knew more about it like Brandon does, but yeah. Next up, iCup says ENPH.
Oh yeah, Enphase Energy. That seems to be a popular one with the viewers, and I guess it's because it's such a volatile stock. I mean, this stock moves like crazy, both up and down. Recently, it's been mostly to the downside. So we all the way down here, 100% extension on the wave 5, right where you would expect it to be, and we're able to bounce from there. It looked encouraging with the fact that we got through some of this resistance here. You can see that resistance area there at 120. So breaking above that looked promising, but we've given it all back at the first part of this year, and trading below the 50-day moving average as we speak today is not a positive. And if we can't get that back above 120 rather quickly, we're probably at least coming down to 100, where there's a little bit of support there. And if that can't hold, then you see where that wave 5 low is that had some consolidation down there around 80. So yeah, it's a bit dicey here on Enphase as well. Not the day you wanted to see today. You wanted to see it back above 120 on the close. Perhaps it can still do it. Doesn't feel like it wants to do that today. Seems more like 100 is in the cards here. And can we hold that? It's iffy at best, because that's not a whole lot of support there. The stronger support would be down around 80. So this one looks like a pretty decent short, actually.
Very nice. Very nice. And last but not least, we have RUM. Rum.
So Rumble, and let's see, there's been some news along those lines, and gosh, we've been showing so many bullish charts towards the end of the year, and the script has flipped. Ryan, we're showing a lot more on the negative side. This break below 5 is very troublesome. You've probably heard me talk about the $5 and $10 levels on stocks in the past. The way it works with the rules, the SEC rules on institutions, you can own double-digit stocks. So the stock hits 10, that allows growth in income funds. So if the investment objective is growth or growth in income, et cetera, you can own $10 stocks. When you get down to the level of 5, you have to have an investment objective of aggressive growth to hold the 5. So fewer institutional securities, mutual funds, et cetera, that are able to hold stocks down in the 5, because not as many are aggressive minded. But when you break below 5, if they don't come in and support it, they're going to bail, which looks to be what's going on now. So when we see that kind of thing, we want to see volume, and you can see it's above average volume on these moves to the downside. So it does seem like some of those institutions are sneaking out of this stock, and it just the tried to hold here, even though they didn't come in and support it. It tried to hold here around 4.5 and give it some sort of a chance to break back above 5. It didn't do it, so it looks like the bigger boys are bailing out of this stock, and we're a little oversold. It's the best thing you have going for you right now if you're long, but we continue to move down like this, and this stock will be headed for the pink sheets, and that would be not a positive. It takes a long time to work your way back into the world of when the big dollar institutions and funds can own the stock. So it looks like everyone is heading for the exits here on Rumble. So perhaps a real short-term bounce back up towards the 10-day moving average, since we're a little oversold right now. But it looks like Rumble has lower pricing in its future. rather than any sort of a significant bounce back to the upside. You just can't go long this stock unless it somehow finds its way back above 5. So perhaps a real 1 or 2 day short-term trade to the upside. Other than that, I would look for some sort of a bounce back towards 4 and then perhaps short it again, as it seems like it wants to go lower. You don't want to see above average volume when you're breaking these levels. You want to see the volume dry up. You want to see these higher volume bars when we're moving to the upside. And you can see they didn't even kind of hang around towards 5 here. You can see all this volume that snuck in through this area as we broke down below 7. So a lot of institutions bailed then, more bailing now. I don't know where the support would come from to move this stock higher. So I would look at this one as watching this one for a short entry on any sort of a bounce back up towards 4. And if you just had to be long, then if you could get a bounce from here back towards 4, that's probably about all you're going to get. Maybe 4.5, but that would be iffy too. So I would take 4 where the 10-day moving average is and be.
Oh, there you are. All right. Another little freeze there. Yeah, all good to go. I'll let you go ahead and send us into the sunset.
All right. Sounds good. Thanks, everybody, for watching. We did have a bit to talk about with the economic reports, which we will be delving into a bit deeper in the U.S. market update over on the EWO HUBB channel this afternoon as we get that ready to post for the weekend. So holiday weekend ahead. Again, I'll be watching the close. We'll be able to talk about that in the market update. How did we handle things into the close will be interesting to see. And then I expect some things to happen on Tuesday coming out of a 3-day weekend for the markets. So enjoy your holiday weekend. Thanks for attending here and look forward to talking to you again next week. Take care, everybody.